All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday morning Inner Circle Live session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen and Ms. Casey Jackson. I hope everybody is doing well today. So glad to be back. Surgery went well. Appreciate you guys' thoughts, prayers, checking in on me. It's greatly appreciated. And we're going to dive in. So as always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So we're going to take just a brief look from a fundamental perspective. We don't have a lot happening. Just give a quick update from Friday. And then we'll dive into the charts. As we move into the end of the month, generally things start to slow down and then pick up, right? So we could see a little bit of kind of back and forth consolidation for the next couple of days until we get to Friday and non-farm payroll. So let's get to it, man. Get to Forex Factory. All right, and 1 second. You guys probably can't see that. Here we go. Drop me a 1 in the chat if you can hear me okay, and if you can see my screen. All right, cool. You guys are seeing Forex Factory. So, just an update from today. All right, we have consumer confidence and job openings coming here at 10 o'clock today. Could give us a little bit of movement in the market, just from an overall data perspective, with the Fed looking at jobs as a key indicator of recession, but also just the overall standing in the market. And as we continue to see continued interest rate hikes, but primarily this week, right, we have ADP non-farm employment change numbers coming in at 8:15 on Wednesday. Then we have some CPI data coming out for the euro, right, looking at an inflationary perspective, as they also have an interest rate increase potentially coming later on in the month as well. On Thursday, we have CPI data for the Swiss franc. GDP, I'm sorry, I missed this one here on Tuesday, also at 8:30 for the Canadian dollar. And then ISM manufacturing PMI for the United States on Thursday as well. And then Friday with non-farm payroll numbers coming out for the United States, right? So we could see a little bit back and forth, a little bit of consolidation as we move through the week, with eyes on these non-farm payroll numbers on Friday. All right. So just keep that in mind. It's the normal cycle of the month and how things generally move. So just be aware. Just be aware. All right. So on Friday, we had the Jackson Hole Symposium, which is the coming together of all the central banks in the world and just talking about financial things. And there were kind of two major things that came out of that summit that I took from it anyway. One was Fed Chair Powell and his stance on the Fed and how the interest rate path will continue to go. And he was extremely hawkish, right? Essentially stating that the Fed is going to continue its aggressive path to increase interest rates until inflation gets into their range, and they have to do so, right? And he also stated that it could cause some pain for citizens as they go through that process. So he was extremely hawkish and very firm in his stance. He didn't waver very much. So that was one piece that I took from the symposium on Friday. So for dollar pairs and dollar crosses, looking at dollar strength, and you saw the market react to that on Friday and even into some of yesterday. So that's one piece to keep our minds on and understand as we move through, as investors are starting to price in the interest rate hike for this month, which they're they're looking at a potential 75 basis point rate hike for this month. That's what investors are anticipating, right? And they're starting to price into the market now. The other thing I took from the Jackson Hole Symposium was the governor of the Bank of Japan, Kuroda, and he was extremely dovish, right? He kept his stance and their stance as far as Japan goes on their current situation and where they stand with interest rate hikes, and they're going to stay where they are and where they have been, right? So in that, you'll see in the markets, your yen crosses are continuing to kind of take a beating a little bit, right? You've got a little bit of relief, and now they're pressing back to the upside. So, so your yen is on the back burner again, right? And you see how that plays out in the market. So those are the two major pieces that I took from the symposium that I've seen play out in the charts since end of last week, beginning of this week. So two things to keep your mind on as you're looking at your charts, and we're preparing to go into the month of September. All right. So that's really it from a fundamental perspective. Are there any questions there?
Hey, Ryan, I was reading an article. There was a think tank over there in Japan, and I guess this must have came after the symposium, and they are in contestant of they're talking about the disagreement with the zero COVID policy, about how was it Zai, how he has another term coming up and everything. Mm-hmm. And it's as if they speak in this, but they're looking for ways to try to curb the inflation. So I was wondering if, with that think tank on the side, is that something, because they say it's interrupting travel and trade, and a couple other things, but those are the two that stood out to me. Do you think that they would have like any interference of causing like disruption just to cause UJ to retrace or correct?
So and we'll look at the technical sides of this too, but from what I see that impacting is more from a oil perspective, right? As they continue to bounce back and forth with the zero COVID policy and in China and how they move. So I see that impacting more of the oil and then potentially your Aussie New Zealand pairs, right? Because that's more coming out of China, correct? Not Japan.
I want to say it said Japan. I found an article.
Yeah, double check. But if it's Kuroda was very firm in his stance, right, and not being open to adjusting their interest rates. They're staying firm with their dovish stance from an interest rate perspective. Even as inflation is continuing to rise, he in Japan has always took the stance of allowing the free market to do what it's going to do, right? And when things swing back in the favor of the yen, right, it'll happen. So it'll be interesting to see if the tone changes as we move through the month of September. As of Friday, his tone was pretty straightforward and pretty firm. So there is unrest there, right? Because people are uncertain or they're frustrated with the interest rate scenario, and it is impacting them. But even with that, because that's been known for a couple months now, right? Where the citizens have had some unrest, but the Bank of Japan has stayed firm regarding where they're going. So if it does, we'll see, and some of the yens are starting to push into some key zones, right? So as they push into these key zones, we could see if those levels hold, right? And things start to shift at that point. But there's a little bit to go, right? So there's still more weakness in the yen. So if it does impact, it could be later on in the month, maybe going into next month if things change at any point. But I do see from a travel perspective, it impacting more of the oil side of things. Also looking at potentially from a development and building and construction perspective, the Aussie and New Zealand could also be impacted, right? Iron ore has started to pull back a little bit from some of its recent gains, and you're seeing some of those impacts of the slowdowns of manufacturing coming out of China, Japan. So that could impact the Aussie and New Zealand from the manufacturing perspective, and the slowdowns in the things that they're doing because of the zero COVID policy and how things basically come to a halt with one COVID case in the area. So those are the areas that I see the immediate impact. Like I said, over the long term, we'll see if the Bank of Japan changes their stance. But that's yet to be seen. So we'll see. We'll see. If you could send that article, that'd be great, though. I'd love to read it. Ms. Denise, you got a question? No. All right, cool deal. Let's Jerry, what's up?
Hey, Ryan. Good morning.
Good morning.
I'm still trying to get this terminology with the fundamentals. So with what happened with the Bank of Japan, is it possible that that's going to cause a risk on scenario? Or it's not going to affect that at all?
The Bank of Japan wouldn't necessarily, on the backside, it could potentially lean more towards a risk on environment.
Okay.
As you'll see a lot of the pairs moving positively against the yen. But what's been interesting over the past say 4 to 6 months is that, and we can take a look at it, right? The risk on, risk off indicators, right? The VIXI has been low for quite some time. It's been moving down since June, but even some of these low levels, right? Beginning of June. So the last 3 or 4 months, technically, right, based on the indicators, we've been in a risk on environment. However, what you've seen is because there's, I'll call it divergence, that may not be the right term to use, but you have the risk indicators being low, right? Meaning that in theory, investors will be putting more money into the stock market. However, you then have your interest rates increasing, which is causing your investors to be fearful and not actually putting their capital into the riskier assets, right? And as you look at, we'll go to the chart real quick and we'll take a look at the S&P 500, right? You see, we had a decent move back to the upside since June, right? So this is kind of that move here of more of a risk on environment per se, but at the end of the day, overall, the market is still moving down, right? So yes, a temporary risk on environment we've been in, right? But it's ultimately just a pullback and profit taking from your bears, allowing price to go back to the upside. And then you see prices turned over in a very, very strong way from a stock market perspective, right? And now your investors are getting hit to the downside again, right? So overall, the market is moving down, right? So there's this divergence happening with the risk sentiment and what we're actually seeing in the market as the market continues to move to the downside, which would then give you the idea of a risk off environment, right? So we've had this divergence happening in the data and the sentiment overall in the market that's been happening. So that sentiment hasn't been fully clear, because then if you look at your actual currency pairs, your Aussie dollar during this time has been moving to the downside, right? Your New Zealand dollar gave us a retracement, but it's been moving to the downside as well. So you're seeing some of the similar action in the market. So for a period, we did have a risk on, but it was more of a temporary pullback and bears taking profit as opposed to the sentiment changing. So as we move through the second half of the year, it'll be interesting to see if things start to get more in alignment from a risk on, risk off perspective, with the movement that we're seeing in the market. So it's been tough to actually say we're in a full risk on or full risk off, just because it's been back and forth over the past 3 or 4 months. So that part has been iffy. So that's what we've stuck pretty much to the technical levels and looking at those as we've gone through this back and forth stage, especially with the United States being extremely hawkish, which also causes investors to say, hey, you know what, I can't be as risky with my money because interest rates are going to continue to increase, and they haven't, and the Fed hasn't given as much forward guidance as they have in the past, right? So investors, they like to know what's going to happen, right? They like certainty. And when the Fed isn't giving that, investors, they get antsy, right? They get antsy. So they're not going to invest as heavily in the riskier assets because they don't know. And as we move through the last 2 months, they haven't been given much. So that's why on Friday, the Jackson Hole Symposium was key in Fed Chair Powell's opening statement, when he was very firm regarding the Fed's stance on where they are, right? So, and that's why you saw this move here happen, right? This was the move on Friday, a strong bearish play, because investors said, okay, now I know where the Fed stands, so this is what needs to happen. And conversely, with the yen, you saw, so the stock market took a dive, right? Dollar rose, but you saw the yen, which generally moves in line with, historically, moves in line with the dollar, right? Move in the opposite direction, because Kuroda, they kept their stands, right? So there's a separation in how things normally move as we've gone back and forth through this uncertain time. I know there's a lot to say, but I hope that answers your question of it's uncertain regarding the risk on, risk off environment as we currently stand.
Wow, thank you for explaining that.
You're welcome.
One last question regarding this. How much do you think politics will play into this? Because no president wants a recession during their term, and we're coming upon midterm elections.
The president is going to try to toe the line as he has, and give the stock market a feel-good story. However, it's gonna be difficult for him to control something that isn't in his control in the first place, right? He's gonna try to give a feel-good story, but if the Fed has to continue increasing interest rates, the economy is going to feel that. So he's going to try, and you're going to probably have some statements where, you know, how they change the definition of recession, right? You're going to have those things continue to happen to try to make the market feel good. However, I don't know how much of an impact that'll have once things actually get moving over the coming months.
Okay.
Because he doesn't have full control over, or he doesn't have any control over the Fed, right? They're two completely separate entities, right? He can make his statements and try to sway them, which in the past it's happened. However, his statements could just cause Fed Chair Powell to change the words that he uses, or pull back on any continued forward guidance, but the actions won't follow that feel-good story,
right?
If they can't, right? So
Right.
you're going to hear some, I believe you'll hear some play in the media when it comes to the words that people choose, right? So pay attention to the words that they say and the words that they don't say,
Mm-hmm.
right? And we'll be able to gauge how the market responds at that point, right? I think that's going
Right.
to be key.
Got it.
Any other questions? No? All right, cool deal. So took a look at the dollar index real quick. Bang, right? So we had the dollar push to the upside, right? And you see we got a push Friday into yesterday, and then we got some indecision, right? Um expeditiously, yes, expeditiously. We pushed back into, right, this weekly resistance level. We weren't able to break out to the upside to get to the D extension on the daily time frame, but we did get a strong push up, right, through last week, and we got some consolidation, and we got this push to the upside there. Now we're getting a little bit of a retracement that's happening on the dollar. If we drop to the 4, right, this was the move that occurred on Friday, push to the upside. This crown pattern, I'm sorry, this head and shoulders pattern here played out on the dollar, right? We hit a D extension, and then price continued to push. Okay, so we came close to this weekly resistance level, didn't quite get there. We're getting this retracement now off of the strong bullish move. So now it's a question of, do we get price to then turn over and continue pressing back to the upside as it came back to retrace, right, previous resistance level here. Okay, so for the dollar, for dollar pairs, you saw yesterday, Sunday, retracements happening. Okay, so retracements happening. So now we want to see, do things start to level out, and then going through the rest of the week, we get a little bit of consolidation, and then do we get another push to the upside to get us to this weekly level, and then see if we break that level and continue moving higher on the dollar, right, and on dollar pairs, which we'll take a look at. Okay, so that's the dollar index. Look and see if these previous resistance levels hold, and then we get a push to the upside. Okay, so as you move over, we'll take a look at the dollar CAD. Here, right? So the dollar CAD, we'll take a look at it from a couple different perspectives, see where we are overall. My system will work. There we go. All right, so from a daily time frame perspective, we've had this move to the upside happening, right? Moving up, came into this weekly resistance level, right? Sunday, and then we got this retracement, which we're seeing in the dollar as well. Okay, this was the move here on Friday, but overall, the dollar CAD has been making its way to the upside, right? As you zoom out and take a look at it. Okay, so we're moving up, making higher highs and higher lows. Okay, making those higher highs and higher lows. It's been difficult and really choppy, but it's been moving up nonetheless. So now the question is going to be, again, right, similar to on the dollar index, are we able to break through this weekly level and continue pressing higher? Okay, we had a strong bullish push. We're getting a retracement now, and the question is, do we turn over and continue pressing to the upside? Okay, so that's what I'm looking at here on this dollar CAD is, right, we got a retracement, and we're trying to push out of this 38.2 level off of this up fib here, move higher. Do we get that is the question, or do we sit in this double top scenario and continue to press lower? Okay, so as we move down to the 4, this is what that looks like. All right, we got a 618 retracement, got a strong push on Friday, came right into that weekly level, and now we're getting this pullback to occur. Okay, back to previous resistance zone, right? And do we get price to turn over and press back to the upside? Okay, now the other perspective you can look at this is here, right? The reason I looked at it from this perspective is ultimately I'm bullish on the dollar and all dollar pairs as we currently stand. So that's why I'm looking at this from an upward perspective. But you can look at this from the high, seeing as this is somewhat of a range that we've been playing in, right? You can run your fib from the top down, and you can see here that weekly level comes in just inside the 618 retracement, right? We had a shallow retracement, price pushing to the 118 and 127 zone, and now we're pushing back to the upside. So if you're looking at it from a downside perspective, if you're bearish on the dollar, right, you want to see price come into your 618, 786 retracement, stay inside this A boundary. Okay, so there's two different perspectives to look at this from, right? If you're bearish on the dollar, if you're bullish. Like I said, I'm bullish on the dollar, so I'm looking for price to continue moving to the upside at some point, right? Because Fed Chair Powell stated they're going to continue to increase interest rates. He wasn't iffy about that in any way, shape, or form. So I'm looking at this to continue to the upside, and at some point potentially take out this A boundary here and give us a deeper push to the upside, right? Come back to retest some of these highs from 2020. Okay. So that's my overall bias on this. So if you're looking at it from the downside, right, just be cautious, right, of that downside being limited, especially as we move into the next interest rate cycle. Okay. So those are the two perspectives to look at it. So if you run that fib from the downside up, this is where that puts you, right? So you have this fib playing out here. You got a 618 retracement. Your matching D extension is just inside the A boundary, just inside this daily resistance level. So if this fib does play out completely, right, you're going to be looking at the A boundary getting tested. Okay. So keep your eyes on that and be patient if you're looking for short opportunities on this, right? Allow price to get to this daily resistance level and see how the market responds at that point, right? I wouldn't be looking for shorts now, especially because it hasn't gotten into our sweet spot, right? I'd be looking at these daily resistance levels to see how the market responds. If price rejects off that level and comes back down, you'll have some short opportunities. If price breaks above, then you're looking long, right? So that's the if then statements in that scenario. Okay. But like I said, my overall bias is long on dollar pairs. So I'm looking for this to continue to the upside.
Quick
All right.
question.
Yes.
Okay. If you're just playing the fibs on this, could you do another sub fib, or would you wouldn't do one?
I wouldn't. You can, with the fibs, you can do a lot of things, right? If you're looking to play those shorter term moves, I wouldn't run a sub fib here. I would simply drop down in the time frames, right? So as we drop down to the 1, right, you see those fibs from the top down being taken out, and now these are your active fibs running to the upside here. Okay. So this is your 1 hour fib to the upside. That's that matching D extension there. If you're looking to play this from the C on this 1, what I do is I would highlight this zone, right? And then I drop down to the 15, right? If you're looking to play those shorter term moves, this is how I look at this. And then I'd run my fib from here, right? And look at it from this perspective. I wouldn't do it from the higher time frame perspective because it can get really, really, really choppy, and you can confuse yourself relatively easily. And you can get, obviously, on when you're running those sub fibs, you can stop that a little bit more because ultimately it's just the shorter time frames, right? So here you have this AB boundary, price didn't stay within. So if you're looking to play that, you got stopped out there, right? If you're looking to play the reversal, price continue moving to the downside. So now you're looking at your fibs coming here like so.
Okay.
Right.
So
and now you're looking at more of a 118, 127 reversal on that sub fib to the upside.
Okay. So if you want to just, because I'm trying to focus in on just swing trading.
Okay.
So because of that, and I'm looking to enter on the 4 hour. So going back to what you just said, I don't want to take the choppier moves. I want to take the bigger swings.
Yeah.
Yeah.
So if you're looking to enter off of the 4 hour, right, I would stick to your entries off the 4 hour. You can do it, right? And you see here, you have those sub fibs, but it puts you in a similar scenario off of the 1. and looking at it from a 15 swing to the upside. So you can, if you want to, if you have a way to keep yourself in line, right, and not getting twisted, by all means, write it into your rules and do it, right? For me, I like to see the clean scenarios, right? So for me, I entered this off of this double bottom here, right? And now on this pullback, I'm just looking to add to the trade to continue to the upside.
Okay.
Right. So that's how I would look at it, is allow the full moves to play out. And as you're trading this and scaling into your trade, right, now you can look at, okay, we got a pullback scenario. And I look at it from that perspective. We got to pull back to a previous resistance level. I can look to add to my trade from there. And on that adding to the trade, then you can drop down to your lower time frame and look for those entry opportunities.
Okay. It's just been it's been a kind of confusing because you see it on the 4 hour and you see you can, you can get pips in those on the 4 hour. It's just I'm trying not to. At first, I was looking to enter on 1 hour. Then I'm like, no, I'm just going to try to swing trade, entering on 4 hour, based on where the daily fibs are, in the direction of the market.
So you're taking your daily fib down to the 4?
Yes.
Gotcha. Okay.
And then using the 4 hour. The daily on the 4 is to keep me focused on the big picture of where I'm at in terms of fibs on the daily, but then use the 4 hour for those waves.
Okay, I got you. So what you can do then, if you're looking at it from that perspective, right, you're doing something like this here then, right? And what you can do is this. Right, so we'll take these out. We'll go to the 4. So you got your daily fib there.
Yes.
Right. And then find whatever your most recent low is and run it from there. It kind of still puts you in the same scenario as we're just looking at, right?
Right.
So what I'd say is, if you find a way for it to work for you, do it, right? Understand, because you understand how you see it, right? My view of it is going to be different. Okay. So I can't say, no, don't do it, right? If you find a way that you can be consistent in viewing it that way and dropping your multiple sub fibs, by all means, right? For me, it adds too much for me.
Gotcha.
Right. So I don't want to confuse you. Right. If you find a way to be consistent in doing that, write it into your rules and understand where you'll stop.
Okay.
Does that make sense?
Yeah.
Okay.
Yeah. Because even doing it this way, I'm still looking for confluence, support, resistance. I mean, the same thing. I just, it's just to your point, just knowing where I'm at. So it doesn't get confusing. Gotcha.
Yep.
Okay.
Yep. Absolutely. Good question. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, man?
I'm doing well, man. How about yourself? How's the morning getting the kids ready?
Well, the haircut stayed on last night.
Whew.
So I'm flying solo, everybody, for this first day of school. I don't know what to do with my daughter's hair. My wife did it last night, so I was praying that these haircuts stayed on, and they did. So far, so good.
We in the game.
No issues, man. No issues.
Good deal. Good deal, man.
Glad to have you back.
Glad to be back, bro.
Absolutely. YouTube.
Good deal, man. Good deal. So that's the dollar cat. All right. Any other questions on the dollar cat? All right, cool deal. So at the end of the day, looking for more upward movement there. To Cassandra's point, right? You got a nice retracement. Now we're looking to see if this previous zone holds and to see if price turns over and continue pressing to the upside. All right. All right. So that's a dollar CAD. Take a look at the dollar yen, right? And it's pressing to the upside as well. Okay. And got nice retracement happening, come back to retest these previous resistance levels that we broke through, right? We got a little somewhat of crown action happening here, right? It's weird because you got that play there, right? But you got a pullback, and now you're looking at that continuation to the upside there. Also, other harmonic patterns that also played out in that, but looking at this ultimately to continue to the upside as well. Okay, this one especially since Kuroda was extremely dovish, right? Looking at something like that, right? So you see you came into the 118, 127, you're getting reversal, coming back to retest this key level, right? We could see some more bouncing, but ultimately, right, looking for price to continue pressing to the upside on this one as well. Potentially at some point getting to our higher levels. Okay. So that's the look off the 4 off of the dollar yen. Looking forward to get to the D extension off of this long-term fib here, right, at some point, and then potentially continuing to press higher. Okay. Bounce back out to the daily time frame. This is the daily look. You haven't gotten a 38.2. Price is stalling in this zone, right? We'll see if we get continued sideways press or we finally press above, right? As we saw for the 4, press above this daily, weekly level and make our way to that D extension there. Okay. So that's a short-term look. We're looking at potential crown action, but we got price just continue to rise through, right? So it's a question, does price continue to rise or do we break this level and fall lower? Could be unlikely if the dollar turns around and we get this press to the upside. Okay. So to come back to the 4, right? That's the look. See if we retest this daily level, strong bullish push, retest. See if we then get that continuation to the upside. All right. So as we drop to the 1, you could have short-term plays already in motion off of this, right? Or any fib off the low. Okay. Shallow retracement. Didn't get to the D extension. We're getting this move down now. It's just a question of how low this move goes, right? Does this daily level hold? If we break through this daily level, right, then I'll be looking for more downward pressure to get to 38.2 and this daily support, right? But for me, it's a question of does this daily level hold or not, right? So I'm not looking at any shorts right now. This play is already in motion, right? But as we get to this daily level, it's do we get a swing low to form and press up, or do we get a break and a retest, right? For then continuation to the downside, right? So that's what I'm looking for there. Okay. If you run your trend line off of this to the upside, like so, right? That daily level comes in line with your middle trend line here, right? So you got a couple levels of support that price will have to break through if it's going to continue lower. Okay. If you were trading this already, your inner trend line already got broken, right? And you're in that move to the downside, right? So as you get to this daily support, just manage your trade appropriately to protect some of your profits as price is moving. Okay. So this daily support level is the one I'm gonna keep my eyes on to see how price responds. Okay. But from a fib perspective, right, we're still in this 80-20 scenario. Okay. Until that D extension gets hit. Questions on dollar yen? No? Okay. Cool deal. Let's take a look at Aussie dollar. And this is a fun one. Yeah, definitely monitor that one and see how price moves on it. This Aussie dollar, okay. From a weekly perspective, we got a 8.6 retracement and price has been moving to the downside, right? we're moving to the downside. We got these smaller retracements that have happened in between. Okay, so as we get down to the daily time frame and looking at this move overall, right? I've been bearish on this we've been bearish on this for a while, right? Dovish on the dollar pairs. So we're looking at price to continue to move to the downside. We got price to come into this daily resistance level, created a lower high, and then pressed off. Okay. So as you zoom in on this, you start to see, right, some potential head and shoulder or crown action in this reversal here. Okay. So looking for more downward movement in favor of the dollar, right? And as we get to the 4, this is what we have, right? Price didn't push up there, but right, we got this crown action happening. Okay. Pushed up, took out your previous high, right? Pushed down, broke your trend line, right? Took out your previous low, right? Created your right tip. So now it's just looking for price to turn over and continue its press to the downside. Okay. So this is where we sit. So if we run our fibs off of, right, just running your fib off of the high, you got a 618 retracement off of that, right? And looking for price to continue down to the matching D extension. Okay. If you run your harmonic fib off of this high here, right? Matching D extensions at this daily support, right? So for me, that's my next level that I'm looking at. I'm looking for a reversal here. Price is coming back to retest the previous consolidation that this bearish move on Friday came out of, right? Looking for price to turn over and continue its move to the downside. Okay. So as we get to the 1, and we're looking at this, right? On the 1 hour, you got a similar deal, right? Price pushed up, give you a nice deep retracement, broke down, strong bearish move, and you get the market to take back some of that. Yeah, I dropped the cloud on the 15 in 1 second, Brandy. All right. So we got price to push down, got a nice retracement that happened. And now we want to see, right, do we get price to turn over and press back down to the downside, right, for that continuation. Okay. So overall, still, right, this is that crown pattern here. Okay. Looking for that continuation to the downside, right? It's just a retracement within the move. Okay. So now 696. Okay. You came just short, looking for another push to the upside. I see that, right? Sell order sitting there, right? So as you drop down to the 15, right, what you're waiting for is your confirmations on the cloud, right? So you're not close yet. You got a break of your Tinkinson here. Price is pushing up. You got the separation of the Tinkinson and your Kijisen, okay? But not close just yet, right? So if you're looking for the cloud break and the cloud confirmations, you got a little while to go, okay? You got a little while to go. Could see another push to the upside, right? And the cloud catch up with price, right? Your Kijisen also press up higher. And then as we start to turn over, get some consolidation potentially, right? Then you'll start to see your confirmations come into play. So off of the 15, right, you got a little while to go. You got to break to the upside here. If you played this, beautiful, right? Now we're looking for some consolidation, potentially another push to the upside, right? And then we'll start to see our confirmations come into play, okay? So from this perspective, you got a little while to go, okay? So be patient, allow it to do its thing. Don't rush it, right? And even off the 1, right, you still want your same confirmations, okay? Still want your same confirmation. So you want to swing high in the trend line break if you're looking at off the 1 hour perspective with your trend lines. Okay.
Hey, Ryan.
Yo, what's up, bro?
Oh yeah, can you go back to your 15 real quick?
Yep.
And drop the fib off that low. Not that one, the next one. The next one up.
Here?
Yeah. All right, there you go. So you're starting to see that gap that's starting to form between that Tinkerson and that Keeganson. So if anything, we try to look at this potentially as a, once it gets up to that 118, 127, if that's a shot, if that's going to be a shallow retracement play, then there's a possibility, right? So that kind of that TK gap setup that we talk about all the time.
Mm-hmm. Yeah. I dig it.
Yep.
Appreciate
Yep.
that.
Yeah. Same thing on the I think it's one setting up on that Aussie CAD too, like that on the lower time frames.
Yes. Definitely take a look at that one. Any questions here on this Aussie dollar?
And my 1 hour look a little different than yours in that I guess that my last fib run from, because wouldn't it be a new fib form from, because well,
You didn't get a 76 retracement here. You came shy.
I don't know, my fib form from that high up there, and then I have the low.
From here.
Mm-hmm.
Did you just run it off of this like this?
No, I did it completely coming down. I'll remark it and see, but
Let's run them like this, but those still got taken out too. Yeah, not sure. Oops. Yeah, not sure what you're seeing there.
okay, I'll rerun it. I run it from the daily, from the monthly all the way down, just capture those last fibs, but I'll do it over. Because it's
Okay.
right at the 61.8 on that last fib for me.
Gotcha. Yeah. So if that's it though, that's the fib there that you're looking at, right? It would have just come running that off that high, sitting at your 618 level right there.
Yeah.
Mm-hmm. Yep. All right. And that's cool too, right? 618 level, right? And you can still see another small press to the upside potentially, right?
Yep.
And then look for your entry opportunity and price to move to the downside. Okay. So just want to keep your eyes on, right? Want to keep your eyes on. Okay. Any other questions on the Aussie dollar? No. All right, cool deal. Aussie CAD, right? You said on the 15, Benny?
Yep, I was looking at it this morning, kind of that same situation, right? Where you got that TK gap. Hasn't formed yet, right? So you could draw your new AB fib. It takes a minute to form it, but kind of similar scenario there.
Gotcha.
Right. So you may get it, it may drop right back down. Like I think the Aussie dollar is starting to push down a bit. So you may not get that play, but that would be my ideal setup, when you get that type of gap above the cloud like that. But just then that Tinkerson is going to act as a support somewhat, if it flattens or like kind of an inner trend line break back down, right?
Mm-hmm.
So it's kind of like how we play inner and outer trend line breaks, where it likes to gravitate towards the next trend line. Those are those type of scenarios when you're above the cloud and you see that separation between your Tinkerson and your Keeganson. So that's how I spot a lot of those lower time frame setups.
Gotcha. Yeah. Makes sense. All right, so keep your eyes on that off the 15. We talked about that, right? Which will lend to, right, potential another press, small press to the upside here before you get that turnover and press down. Okay. So keep your eyes peeled on that one as well. I want to take a look at this Swiss yen. It's been interesting, right? It's already on the move to the downside now. But what we're getting off the higher time frame is this action here, right? So from a monthly perspective, right, we're creating new highs, right? Broke this monthly level and we've just been moving sideways so far, right? Strong push up, came back, retested that level, and we're pushing off that level again, but we're playing at this resistance here, okay? You get to the weekly, you haven't gotten a 38.2 yet, right? Haven't gotten a 38.2. You got your weekly resistance level here, weekly resistance level here. Price pushed into that level last week. And again, at the beginning of this week, and we're getting this rejection out of it now, right? So the question is, do we push back down to at least this support level again that we broke through to continue to play in this range, right? So top of the range to the bottom of the range here, okay? So that range there it's a 400 pip range, okay? So as we continue to drop down on the time frames, you see that a little more closely, okay? And from a daily perspective, we also haven't gotten a 38.2, okay? So still playing in this B boundary zone, pushing out of this weekly resistance, right? So what I'm looking for is either price to come back down to this monthly support level or finally break this level and give us a deeper move down, which would ultimately give us, right, a deeper move here on the weekly as well. Okay, so this one is interesting because you had Kuroda, super dovish, right? But you also have your Swissy pairs that came into key levels also starting to reverse now, right? So the Swissy pairs are also taking somewhat of a hit. And in this scenario, right, against the yen is taking precedent, okay? And so I'm surely looking at this initially just in this range, right? So top of the range, looking at it to come to the bottom of this range, okay? So as we drop down to the 4, you see prices approaching this trend line now, right? So if we get a break of this trend line and a retest, that'd be potentially a good entry opportunity for us to continue to play this to the downside if you're not already in this move, right, to the downside, okay? Off the 4, you did get a 38.2, but again, this is the range that I'm looking at. Top of the range to the bottom of the range, okay? So as you get down to the 1, you see the double top action here, right? You got a double top, swing high form, then you got your trend line break, and now price is pressing down, okay? So what I'd be looking for on this, if I wasn't in this already, looking for a pullback, right? Potentially retest this trend line that it broke, and then looking for opportunity to continue to play it to the downside, right? If we get to the bottom of that range, it take out, right, the A on this 1 hour fib. We're looking at price coming down here at some point, okay? The shorter term, right, you could even play it to this daily support level, okay? In this smaller range here, right? But I'm looking at it from a longer term perspective and looking to play this wider range from top to bottom, okay? So we're just getting started. So be patient on this one and wait for a pullback, right? Wait for a pullback, and then we'll look for a continuation to the downside here, okay? You don't have a sub fib to run off of this just yet. So once you get a swing low to form, then you can run a sub fib from the high, right? And then look for that retracement back into your sweet spot, okay? So keep your eyes on this one if you're not already in it. Potentially a pretty decent opportunity to play this to the downside off of a nice retracement. Okay.
Hey Ryan, I have a question.
Yes.
Why do you mostly use your Ichimoku cloud on the lower time frames?
This gives you the shorter term moves, right, and the shorter term entry opportunities. So it's similar to if I was looking at getting a tighter entry off of a 1 hour fib or 1 hour trend line break, right? This on the 15, it gives me that, but it also gives me some additional confirmation off of the lower time frame trend line breaks, right? So this acts as my inner trend line, my inner and outer trend line on the 1 hour time frame. So I can use this as that confirmation when I get all three of those. From the higher time frames, you can do it, you can use it here, but you're looking at just a longer term scenario, right? Because you're just now getting priced to break your cloud here, right? So you would have missed this whole move to the downside,
Okay.
right? And it's okay, right? So now you're looking at, okay, I got my break, right? And you got your cheaper span to break through price, and you got your Tiggerson and Keegerson on the other side of price as well. So now you have to wait on the twist, right? So it's going to give you, you're going to catch the longer portion of this move off the 1 hour, but this original entry off of the high, you would have missed all of that, right? So I'm just looking at when I do use the cloud, right? I look at just from those shorter, tighter entries, right, off of my inner trend line breaks. That's what I use that for off the 15.
Okay. Thank you.
You're welcome. Right. And you can even use this, right? If you're looking at just shorter term trades, right? You can even use it on the 15, just looking at these shorter term opportunities like this. You got your cloud break and you could have just played that for 77 pips and been out. Right. But for me, I look at for when I do use it, right? I'm looking at it just from an entry opportunity perspective to give me, like I said, that tighter entry off of a inner trend line break, looking at the move to the downside, right? And then I'll manage my trade off of my higher time frames, right? Because you can even drop it here on the 4 as well, right? And here you're still waiting, right, on the cloud, on the twist. Tigginson and Nikitinson are just now trying to get on the other side of price, and you still have your Chiku span that hasn't even approached price yet, right? So you still got a little ways to go off of the 4 to look for that entry there, right? But when you get it, right, you get these, you get massive moves, right? 185 pips, right, here off the break, 300 pip move to the downside. So when it happens, right? So it all depends on what time frame you're looking to trade on.
Hey, Ryan.
Yo.
Also, too, right? For those people that like to stick with the trend, like for your example right there, was this on the 4. If you drop down to the 1 for me real quick. For people that, like you said, that like that extra confirmation, right? So whereas at the 6, say your trade plan calls for those 61.8 type of moves, right? You got that daily resistance right there support. So when we typically come into a support level, it will, move sideways a bit because price is trying to decide what it wants to do next. But you can stay out of all that, right? So say your trade plan calls for, hey, I'd like 61.8 entries. Maybe you add that caveat, hey, I'd like 61.8 786s with the cloud break bullish, right? So you can see that move off the cloud, right? Once it broke through the cloud there for a move to the upside. Right. So like that's exactly what Ryan is saying, is that you can use it on every time frame. It just takes a little longer for things to play out. Right. A little bit more patience.
Yep, a little bit more patience. Yes, Bradley. Benny did a full session on a Saturday breaking down the cloud and the confirmation points that we look for. What was that, 2 weeks ago, Benny? 3 weeks ago?
Yeah, I think it might have been 3 weeks ago now. But if you look on a weekly rigid, it'll have like in the title, Ichimoku Cloud, I think training or something like that.
Yep. So hop into the platform. Click on the weekly rituals, right? And look for the Ichimoku Cloud training. All right. Cool deal. I didn't get through a ton today, but great questions. We got a few things that potentially setting up for us, right? So, like I said, keep an eye on the yen crosses as they're pushing the key levels, and keep an eye on your dollar crosses. Any questions before we wrap this thing up for the day? Ben, you got anything else before we close out, bro?
No, sir. Awesome session. Like you said, lots of great questions. And I look forward to seeing everybody tonight, 9 p.m. Eastern Standard Time.
All right. Appreciate you guys. Have an awesome day. We'll see you tonight. Peace.
Great session. Have a good day.
Thank you. Thank you.
Bye-bye.